Good morning, guys. It's O'Neill Anderson here from GlobalFX. Um, I just want to go through a few pairs. I won't get into much detail with regards to the technicals as well as the fundamentals behind it, but I just want to give you, like, guys, a quick overview of what I am currently looking at in the markets. Um, and we'll just go through a bit of the fundamental or the macroeconomic factor that's driving, that's going to be a driving factor in the week to come in the pairs that I'll be looking at. So first thing here, what we have on your chart here, you can see, okay, this was a trade that we had taken last week on the USD CAD. But before I even dive into the USD CAD, I just quickly want to look um, at the CAD JPY. Right, if you guys recall correctly, we did have a short position on the CADJPY, and we did actually hit our take profit. Although that our stop loss was very, very tight, or rather the market came very, very close to our stop loss. But nonetheless, we'll be going through, I won't run through that much pairs due to obviously I have limited time on TradingView. The pair you are looking at now, you're looking at the CAD-JPY, right? I'll just sort of give you guys a basic foundation of the things that I look at whenever I do my analysis. Um, I basically always look at the currencies that make up the pair, and I look at what are the driving factors behind a particular currency, right, relative to a basket of other currencies. Now, what we can see here that CAD JPY. First thing that we know is that the Canadian dollar, it is a commodity currency. What I mean by a commodity currency, I basically mean that its strength is largely dependent on either one or more export commodities, right? I won't get into much detail, but we do know that the Canadian dollar is largely dependent on oil prices. Um, Let me just zoom in here on the chart. Now, what we can see here is that we did have a drop, right, in the Canadian dollar last week. Now, if you actually look at this drop here, it was also supported by the drop in oil prices. Now, basically, with regards to oil prices, if you were in the webinar last week, then I'm sure you pretty much caught the trade on oil, because I do recall we did actually have a live session. We did have a live webinar where we went through the analysis and the fundamental factors that's driving oil. Now, what we know that from last week, what we basically spoke about, if you weren't in the webinar, I recommend that you just send your full name and your contact details to bookings at gforex.co.za. Then you will actually get emails of our regular webinars, and you'll get dates of when we actually run our webinars. Now, considering last week, what we've seen in oil, right? Um, now you guys might question as to what does oil has to do with CAD-JPY. As I said previously, that um, Canadian dollar, it's a commodity currency, so its strength is largely dependent on one or two commodities. Now, in the case of the Canadian dollar, it's largely dependent on oil prices, um, and that's strictly because that Canada, it's they are a large exporter of oil, right? So their oil exports, it contributes to a significant factor of their gross domestic product. So that's why whenever you trade a currency, you always want to look at know what currency you are trading, and know what are the macroeconomic factors that actually influences that particular currency. It won't always be commodities that has an impact on certain currencies. From a macroeconomic perspective, you can offer from a fundamental perspective, you could be looking at geopolitics. You could be looking at political tensions between countries and so forth. For example, um, if you're looking at what's happening between the US and China, China basically they consider Taiwan part of China, whereas um, Taiwan doesn't actually consider themselves part of China. And we have seen amid the whole global pandemic that the US has actually been assisting Taiwan, and that obviously is going to cause political tensions between China and the US, right? I won't get into much detail regarding that. But coming back to the point I was trying to make, right? We've seen last week, we've seen the drop in oil. Basically, if you're looking at your COT reports or your COT data, your commitment of traders, right? That is basically what COT stands for. We've seen a huge decrease in the bullish net positions in the WTI crude oil futures markets in the past week. WTI is basically Western Texas Intermediate crude oil. We've seen a huge um, decline in the bullish net positions according to the latest COT reports that was actually released on Friday, right? Now, the non-commercial futures contracts of crude oil futures that are traded by large speculators and hedge funds. We've seen that on our COT report in the previous week. It totaled to a net position of about 535,317 contracts, if I'm not mistaken, right? And that was in the data that was reported on Tuesday. Tuesday was the 7th of July. And we've seen that in the latest report, we've seen a drop of 8,509 net contracts from the previous week, which actually had a total of 543,826 net contracts. So that basically means that we've seen that the people that had actually had placed long positions on crude oil, they've been actually cutting back on their net long positions. Um, that basically what I think, if you had to ask me what I think, it's due to the fact that we've seen that oil reserves or the oil inventory reserves, um, I think it was the highest number reported in I don't know how many years. But that basically means that there's a lot of oil inventory reserves that are basically stationary or that are just sitting there in the warehouses. And obviously, that has, if you consider in terms of supply and demand, um, it just tells you that there isn't that much of a demand or that there's more supply than the actual demand. And we do know that if you have more supply than demand, then prices do actually drop, and that is what we've had for um, in this situation of oil, of crude oil, right? And because the Canadian dollar is a commodity currency, it's largely dependent on crude oil. So we've also seen this drop in CAD JPY, right? Now I'm just going to zoom out on CAD JPY. I'm looking at a 4 hourly time frame. What we can see on the CAD JPY is that if you're looking at a broader perspective, you can see that price has actually been stuck between, before we had that breakout last week, we've seen that price has been stuck between these two areas of support and resistance. Right, I'll just draw it in like this. Right, so price has been between that support and resistance. I won't get into much detail what support and resistance is. You guys should know that by now. Right. I'll just pull up a rectangle and I'll just highlight this consolidation zone, right? Now we can see that the market has actually broken below support. So basically the market has broken out of that consolidation area, and obviously that what I'm expecting is it's a pullback to test that support as resistance. Remember that before we actually had a breakout, price served as support right over there, as well as support over here, right? We've had a breakout of that, so I'm expecting price to actually retest um, this very same area as support at around 78.935. And then I'll be looking for short positions here, right? And the reason why I'll be looking for short positions is if I look in terms of my EMAs, right? Yeah, I'll just change my setting of my EMAs. I my EMA settings, they are not always the same. At times I have a at times I'll only have a EMA and a normal moving average or a simple moving average, and at times I would have two EMAs. And in this case here with CADJPY, I'll be looking at a 10 EMA. Then I'll also go ahead and add a slow EMA. Now my slow EMA, I'll make the period rather of the EMA. I'll make it 5. So I'll be looking at a 5 EMA as well as a 10 EMA, right? Now I won't get into much detail with regards to how EMAs work. But if you've taken the course before, you should be very acquainted with EMAs. I'll just change the setting of the EMA in blue. Right, and I'll make this 5. So the 5 EMA, that is going to be the one in blue, and in orange I have my 10 EMA, right? So the way I would use my EMAs is that as long as my blue EMA is trading, or rather is below my orange EMA, so I'm still looking at for sell positions, or rather the market sentiment is still pretty much bearish. And if the blue EMA is above the orange EMA, the market sentiment or market direction or directional bias is bullish. Now what we can see here in this case is that price is still or rather the blue EMA is still below or trading below the orange EMA. But you can see here that price, this 1 4-hourly candle, is currently trading above the EMA in blue, right? But we are still, however, in a directional. The directional bias is pretty much still bearish, so I'm still looking for sell positions in here, right? Um, and recall that I mentioned that I'm looking for a retest of that support that has been broken. I'm looking for the market to actually test that support now as resistance. So what we can see here is that here at the bottom we do have support there. We have support here previously served as resistance, right? So this is a very straightforward setup. But I'll just I'll do proper analysis and just send the screenshot of my analysis as well. But I just wanted to go through what I'm looking for on the CADJPY right now as we speak. So I'll just go a time frame lower. I'll look at a 30-minute time frame. Now what we can see here on a 30-minute time frame is that we've had sort of a double bottom here at support, right? So there's where we had our double bottom, and here at resistance, that's basically where we had our neck. And we can see that price did actually break through that resistance area, right? So this was the neck of that double bottom reversal pattern, and we've had price break through that, and we've had a retest, and we can see that you have a strong bull candle close here on my 30-minute time frame. So I am going to be considering entries once price has broken through this resistance here, and then I'll be looking for long positions for price to actually push all the way up to this resistance here. If not that resistance, we could also consider this previous support level here. So it's a very much short-term trade, so we won't be looking at holding it for about 2 or 3 days and so forth. So I am looking for that long position there. Then once price gets here, I'll be looking for price action confirmation. I'll be looking at candlestick formations and so forth. And that's where I'll be looking for short positions. But at the moment, I am actually looking for long positions once we at a break of this current resistance area here. Let me just go to a 15-minute time frame. Now, always remember that if you looking at your CADJPY, if you're looking at the setup the way I'm explaining it to you, you always want to keep an eye on the news. And when I say the news, go look at your economic calendar, see if you have any fundamental releases that's going to have an impact on the Japanese yen. And I would encourage that for the Canadian dollar, you keep track of oil prices. But with oil prices, I am expecting oil prices to rise a bit. And it's not all the time, but usually that commodity currencies, the price performance of that particular commodity is usually the leading indicator of the actual currency, right? So you see what we can see here is that we currently have a double top forming here, but I'm not looking for short positions until price gets around 78. Around 78.9 or 78.88. So that is when I'll be looking for short positions. If the market comes all the way down here and it breaks through this support here, where we had our double bottom on a 30-minute time frame, I'll be missing that trade and I will not be going short, right? So that is what I'm currently looking at on the CADJPY, right? So it's a very straightforward analysis. It's very simple. You don't always have to overcomplicate your trading and so forth. Just stick to the basic things. Learn to like master price performance. Understand how currency pairs work. Understand what's actually affecting the strength of those particular currencies. Right. If I take my fib retracement, you can also expect price to come back up to a maximum here of a 50% retracement. That is at a price of 78.969. Then we could be also looking to have a bit of short positions over there. So ultimately, I'm still looking for this retest here, which is a correction of this impulsive move to the downside. So whenever we have this correction here, this is when I'll be looking for short positions, and we could possibly be looking at probably double tops. We could be looking at head and shoulder patterns, for example, or triple tops, right? Whatever reversal pattern we can actually identify at approximately between 78.8 and 78.96. That's where I'll be looking for my short positions.